How's it, guys? It's Linton here. So I just wanted to give you an update on the Nasdaq and what I'm looking at the moment. Um, the very interesting thing here is you'll recall I mentioned in previous analysis that I'd sent out that the one thing that was standing out to me was that this low over here never quite hit the 38.2% retracement. And just to be clear on which retracement I'm referring to, it's the retracement from March of 2020 to the high, which was in November 2021. So the retracement levels from there are exceptionally important. And we have now officially hit the 38.2% retracement level. So it is possible that we could see a rally from this point, being as that this retracement level has actually officially been tested. But I fear that the current situation in the market means that we're actually going to see further downside. You'll recall I also mentioned that these orange lines are indicative of a 10%, 20%, and 30% retracement or correction from the all time high. And just because we close below one of them doesn't mean we have to hit the next one. But what I did mention that I found very interesting is that a 30% correction from the all time high puts us at exactly a 50% retracement from this low to this high. So that would be a very, very significant level for me. Now, if we go back to the daily time frame, here we can see that on the daily, we actually closed below this 38.2% retracement. So it could be a bear trap. And a bear trap obviously means a close below a certain level and then a rally. A lot of sellers would be looking at this level and saying, okay, we've broken it. We should be going straight to the 50. But what could realistically happen is we could see a bounce all the way back up to resistance levels. Maybe here, we could possibly see all the way back up to the top of this trend line over there, and then a push back down to that level. So sellers who got in over here might find themselves eating a bit of a drawdown before getting into profits. And I don't know whether a lot of guys will be able to hold that kind of trade, depending on how leveraged they are in their positions. So the fact that we did break through this 38.2% retracement does mean that it opens up this level as a possible target. So that's the 11,700 level that I've been speaking about for the last couple of weeks. The downtrend very much intact at this point in time. As you will recall, I mentioned that the formations of lower highs, lower lows, lower high, lower low, lower high, lower low, lower high, lower low, and then we had a higher high. And I said it's very important to see whether we get the formation of a higher low. If we did get a higher low and a continuation from there, the trend could have continued. But I was watching for this to see whether this level over here breaks and a lower low forms, which is exactly what has happened. So we do have a lower low, which means that the downtrend is very much intact. It doesn't necessarily mean that it will 100% continue. I think the close of this week will be very important. So if we go back to the weekly time frame to see whether we close above, on, or below this 38.2% retracement, if we do close below it this week, I'm pretty certain that we're going to see the next level down. So the next level down would be this 50% retracement over here. So very much depending on how the market closes tomorrow, I think that'll have a huge influence, but downtrend intact. And I believe what we're possibly going to see is this being a three-wave formation, which I have been saying for some time, with a bottom target over there. At this 50% retracement, I will definitely be looking for a move to the upside, which would break this high over here, this previous high. So that would be a really, really nice trade. Holding it for that period of time would also yield great returns. And dependent on how it performs on the way up, if we get small corrections and a breakout of that correction on the way up, I would add into my trade. Same if we broke through various Fibonacci retracement levels on the way up and we got small corrections like this with breakouts of the corrections, I would add into that position on the way up, and we'll definitely be looking to capitalize on that move. The other thing to note is that we are very oversold on the indicators that I use. This is momentum, and this is an RSI. We are very, very oversold at the moment. So the possibility of a rally is there. And this could be a bear trap. So you've just got to keep your eyes on that and see whether it pans out. If we do get confirmations of a move to the upside, the first thing I'd be looking for is a break of this trend line over here. And then I would be looking for a corrective structure above that. So I would be waiting to see a breakthrough that trend line, some kind of corrective structure to form, and then a break of that corrective structure to give an entry to the upside. Alternatively, I'm still expecting downside. This is my overall view: is that we should still see this move down to the 50% retracement level. I believe that that is on the cards, and from this point, I will be buying with a lot. As you can see on the weekly time frame, we are also very oversold on the momentum indicator. The last time it was sitting over here was back in March of 2020, and after that we saw a huge rally. We did see oversold area before this rally as well in terms of momentum and on the RSI. RSI could still come off a little bit on the weekly time frame, so this is why I think the possibility to see a little bit more downside is definitely there. And my target would be this 11,700 mark. I believe that there will be a big reversal from that point if the price does reach there. So for now, downtrend intact. We need to wait for confirmation of a break to the upside to see if this move will hold and whether or not this was a bear trap. Happy trading, guys. Cheers.